The short seller Marc Cohodes has made quite a name for himself in the Canadian markets. He shorted some of the most loved stocks by analysts and investors alike, often with impressive results. His most impressive, of course, being his short position on Concordia. Some have more muted returns, like his short position in Equitable. But he's not without controversy, as some question his brash tactics, particularly on Twitter, where he can resort to name-calling and cheap shots when talking about management he dislikes. Now, some find it repugnant to feature such an outspoken and often rude short seller on our channel. And while we understand this opinion, it's BNN's policy to seek out a diverse set of informed views on all issues and feel that suppressing short sellers would do a disservice to our viewership, who look to make fully informed investment decisions. His most recent campaign against Home Capital was potentially dealt a blow as Warren Buffett, the world's best known and most successful investor, took a stake in the struggling company. I spoke with Cohodes about why he remains short despite the Buffett investment. Our interview has been edited for time and in accordance with our editorial judgment and standards.
I don't lack confidence, but I want to have the courage of my convictions, and a lot of fools can be confident, so I retest my theory. And I think the thing with Warren Buffett is he makes it very clear that he did no due diligence on the company.
Why do you say that?
Well, he said he did no due diligence on the company, and he said the deal came together in 3 days. So I think someone literally put a press release in front of him and he signed it on his words with HomeCap, because he puts no one on the board. He has no say in management. It's essentially a loan shark deal, and I think it was a backdoor deal by the Canadian government because HomeCap was set to fail.
But that's not necessarily been his style. There was that line that said no further due diligence was required, but over a period of 3 days, given the deal that he got. I mean, how much time does he really need to understand a market, financials, that he's already pretty familiar with?
Well, I'm glad you asked that question. So when they first came clean with their mortgage origination fraud, it took the great Martin Reed exactly a year and a half to go over 1.9 billion of mortgages. So given that HomeCap's book is 25 billion with a B, it would take the average person longer than 3 days to figure out exactly what's in it. And the Canadian banks all looked at it and passed along with everyone else. So,
but it's also not a space that they play in.
Well,
why would the Canadian banks look at it?
Well, loaning money at 9% to get 40% of the company, why wouldn't a Canadian bank do it? It was widely...
It's not 40%, it's 20%.
Well, it's 20% now. When the company, after they report earnings and people realize how awful they're doing, the stock will quickly approach his price, and the shareholders, if they had any sense, would allow Warren to buy more stock, because the company structurally will fail, and they will and should go out of business. And I think Warren's in for a loan sharking deal. My cynical approach is he cut a deal with the government which buys him a seat at the table for some big deal he will do in Canada somewhere down the line. That's my prediction. My prediction is that Warren Buffett will get a sweetheart deal to do other Canadian investments with the pat on the back of the Canadian government.
Isn't this the sweetheart deal?
Oh, no. HomeCap is not a sweetheart deal. HomeCap is like eating a lemon or playing a game of Old Maid.
What do you think is the issue with Home Capital today? Because we've already seen what has taken place over the past couple of years. What makes you so convinced that this is a stock that goes lower, not higher from here?
HomeCap, when the final chapter is written and former employees are in the process of writing books of what's going on there, HomeCap will be revealed as one of North America's great corporate fraud, lack of disclosure, unshareholder-friendly companies out there.
So those are three separate things: fraud, disclosure, and it's shareholder-friendly.
Exactly.
And that's a pretty broad spectrum.
It is.
You could say that the latter two have been proved, but on fraud, that's something that you've been on for a while. We haven't seen widespread evidence of that.
When you admit to the disclosure violations that the OSC accused him of, when you plead to that, that is fraud. Right? When the OSC charges you with something that is, and plead to it, that is securities fraud.
They settled. That's a difference between pleading to. We don't actually know what they've copped to until later.
They settled with an admission. We won't know till August exactly what they officially were charged with or what the OSC had.
There's been an overhaul. There's been fresh blood. There's now a new CEO.
They are beginning to start to change things over. And I think if they run this thing like a legitimate outfit, the company will not make any money. I think their loan loss provisions will go through the roof.
Now, I was talking to a mortgage broker who said, actually, because you've seen this tightening in rates, what you've actually seen is a big move into the alternative lending space. And they're kind of positioned in a sweet spot for that, because if rates are going higher at the Canadian banks, this is the environment that the alternatives thrive in.
Well, thrive is an interesting word. I wouldn't say they'd thrive. I'd say if you run a legitimate show and you can verify income and you can properly verify collateral and you write a properly underwritten loan, God bless you, right? All that's.
Then why aren't their losses higher?
Why aren't their losses higher?
Yes, if all of what you're saying is true, why haven't their losses been higher, even in that portfolio?
In that portfolio?
Yes.
Because according to 3 people who used to be there, they used to run loan losses through SG&A.
Meaning?
Meaning instead of running loan losses as loan losses, they called it SG&A and they shifted stuff up.
Selling general administrative expenses.
Yeah, I think the numbers can't be relied upon. I think the auditors should go in and retest everything.
I want to take a step back, because you've said a lot of things. I know this happened, I know that happened, but most people don't know because it hasn't entered the public discourse. It hasn't appeared anywhere, and no one, perhaps except for yourself and a few others, have seen proof of the things that you know. And you said that how you know it is because you do homework. You go and you talk to former employees. Do you have sources that are both former and current employees, and what's the ratio between the two?
I have no one who's current.
No one that's current?
I have no one.
Doesn't that inherently suggest that there's a bias there in the kind of information you're going to get?
Well, of course. You know, I'm a hunter and I'm a gatherer. And I'm a stalker, but not in a pervy, weird way. I follow things. I'm glad I can make you laugh a bit. And eventually, when you talk to enough people and you see enough things, you know, and this is not my first rodeo. I mean, I was short subprime in the U.S. back in the day, so I know what it kind of looks like and smells like when something's not right. But you get a scattergram. When you shoot a shotgun against the wall, there's sort of a pattern. There's a bullet pattern. And I throw out the people who are too negative, and I throw out the people who are too positive, and I assume bias. I assume bias in everything that I get. But you end up getting a sense. You end up getting a tone at the top sense. You get a sense from people what went on about Soloway's heavy hand. The one thing that's important is people in Canada, 99% of them are God-fearing, righteous people who know right from wrong. And I call them the kitten and rainbow crowd. They see wrongdoing, they just don't know what to do, but they don't like speaking out because they're scared to speak out for retaliation. I'm not scared. They want to sue me? Fine, sue me. I'll come after you then. But the problem is they need an avenue of where to go. And through my Twitter, the @AlderLaneEggs, a lot of people reach out to me in all walks of life because people know stuff. And some of it's nonsense, and some of it's garbage, and some of it's real. And when it's real, I pursue it. And I'm only involved in 6 or 7.
Is it just you that pursues it? Or do you have a team of people that help you? Do you have investigators?
No, I have one person, my right-hand man, Luke, who I pay. Right, and he helps me with the website, and he helps me with my thinking, and we talk about stuff. He's very smart. He's an MIT guy, and I'm not that sharp. I'm just a hard knocks kind of person.
But
and we two things up. But what it is it's calls, it's thinking, it's pattern recognition, it's trying to put 2 and 2 together. It's former brokers. There's people, I think, who deal in street money who are here and there, and they're now mortgage brokers. And you get anecdotal stories, and it just takes time and energy to piece things together to figure it out. It's labor intensive. I mean, you have to be demented to actually do this.
Well, you've made it your life's work to only short stocks, and yet you found in a short period of time a collection of 6 Canadian stocks to short. Seems like a lot, though our market is smaller than the opportunities in the U.S. But is there something to the Canadian market that makes it a lot easier for you to find these targets?
Well, you know, we were talking about this last night amongst a group of pals, and I think that, you know, I have a couple things. I say bet the jockey, not the horse. I look for operators. Good operators don't know who the heck I am, right? Because I want nothing to do with someone who runs a good ship. You know, I happen to think a lot of people are short Constellation software, but I wouldn't mess with that guy for all the tea and shine. No, I think the guy, his stock may be whatever, and people may say whatever with his accounting, but that guy's an operator, right? And I have no interest in messing with good operators.
Can you give me a few other Canadian names that you've passed on?
All the legitimate company. I mean, I sit in a tower with a high-powered rifle, and I focus on a target that I think the accounting is bad, the operators are bad, the balance sheet is bad, and if they go out of business tomorrow, no one would miss them. The fact that they also try to focus on the shorts and focus on short interest and do anti-short techniques, that's a plus.
I don't know how familiar you are with Carson Block, but when he came out with a short of Asenco Gold, before that, he tweeted and said, "Hey Canada, I'm coming out with a short." The market assumed that it was another company,
Element.
Yeah,
right.
Which, you know, fell out of bed just on that fear. If you knew about Element and Fleet, I mean, presumably you would have had the confidence that.
Exactly.
So is that a problem in the Canadian market? Specifically?
There's two problems. Well, there's many problems, but the two specific problems is research. Research is calling the company, talking to management, and repeating the management story. All the defenders of EIF and Badger, that's all they've done. The second problem is the concept of short and distort, and it drives me up the wall because one, I don't short and distort. Two, I'm a long-term guy. Three, I use my own name. Four, thanks to Terry Corcoran or whatever he calls himself at the FP.
That's his name.
Okay, I'm now in the website game instead of just Twitter to post what I would call facts because I'm not a bullshit artist and I do not put out fake news. Three, I use my 4 or 5 or 6, I use my own money. I don't have a fund, I don't have a team, and I have no PR department. I pay lawyers, not PR. So I'm real and I'm on the line, and the common theme through all my names have always been in our ripping off people who are defenseless. Concordia, gouge people on UK drug prices. Home Cap, subprime mortgage that ripped off individuals. So I fight for, you know, back in the States, subprime education I was on, subprime travel, which is timeshare, subprime mortgage. So there's a social thing where I try to help people out, and I don't take anything down. I just expose bad actors and bad companies taking advantage of the system, and they do deserve to be exposed. I mean, the markets, I mean, you may hate me, you may love me, I have fans, I have detractors. But my overall presence and being is good for the markets because it creates another side to some of these crazy stories that are out there. And I encourage more people to speak out, and it's really sad more people don't. But everyone's concerned about being sued or giving up their name or being threatened or things like that.
We reached out to Home Capital Group after the interview, and the company says it has no comment. The company will report its latest earnings today after the bell, so we'll have a chance to speak out on any of the issues that it wishes to. Pretty interesting that even in the face of a Warren Buffett investment, that, you know, he's kind of sticking with his short position on that name.
I thought there was a lot of fascinating stuff in there. I mean, the things that really got my attention were the way he operates. Years ago, I interviewed Michael Berry, who became one of the central characters of The Big Short. Works out of a very small office independently, and here's somebody who questioned what was happening on Wall Street. You kind of have to have that mentality, and Mark seems to have it. His use of Twitter, you also talked about Carson Block. I think that's something that a lot of Canadian companies, a lot of investor relations departments still don't get. The dialogue around public companies taking place on the internet and on social media. Mark uses it in an effective way, and there's always this question about why companies are not getting up to speed with the way information travels today. And then the third point that really caught my eye was his comment on the Warren Buffett investment being a precursor to more activity in Canada, because he is not the only person suggesting that, given Berkshire Hathaway's housing business, which gets bigger and bigger. That was a very interesting comment.
And his suggestion that this was, part of something that was welcomed by the Canadian government initially kind of raised eyebrows. And then you had a couple of days later on our station, Bill Morneau actually acknowledging that a few weeks before Warren Buffett made his investment